about options trading education and the H2 2026 outlook. The title goes to Understanding SPX 0DTE, Market Events, AI, and the H2 2026 Outlook. I'm your host, Esther from Tiger Brokers Community, and thank you for joining us. Hi, Selena. Welcome you, and please say hi to our audience.
Hi, everyone. Hi, Tigers.
Great.
I'm Selena Han, founder of Han Insights and a former CBO economist.
Thank you so much. It's so pleasure to have you. Before we officially begin our guest speaker's presentation, let me make a disclaimer as usual. This broadcast has not been reviewed by the MAS. The views expressed are the speaker's own and not Tiger Brokers. Today's session is strictly for educational purpose and is not financial advice. Investing involves high risk, and past performances does not guarantee future results. Okay, for those who join us for the first time, let me quickly introduce Tiger Brokers. We are a leading global online brokerage firm. Tiger Trade is our flagship trading app. It has over 20 million users with more than 2 million active investors across many countries. It also empowers you to trade a wide range of securities in the US, Hong Kong, Singapore, England, and Australia. We also have powerful tools like Tiger AI, Boost Card, the Cash Boost account to enhance your investing experience. If you want to learn more about those functions, please follow the app's profile, my offline event section for occasional meeting products. Beyond the trading, our Tiger community also welcomes you to share valuable or interesting market insights or your personal trading logic and psychology. Okay, thank you so much for listening. Now, let me bring out our guest speaker, Selena Han, for today's live stream. Yeah,
Thank you.
Selena is the owner of Han Insights with an impressive background of former economist at SIBO Global Markets. Selena now dedicates her time to running Han Insights as an independent researcher. Hi, Selena. We have some questions for you. Let us learn more about you, okay?
Yeah, thank you, Esther. It's a pleasure to be here.
Could you please introduce your professional background and interesting experience and your investing history? Thank you.
Thank you. It's my pleasure to be here again. And my professional background is mainly in US equity markets, listed options, derivatives, market structure. At SIBO, where I spent 8 years over there. I worked on research, policy analysis related to US capital markets, option markets, retail trading, market quality, and other related topics. I think what makes my background a little different is that I was not only looking at markets where the investor side, but also I study the market from the exchange, market structure perspective, how products are designed, how liquidity is formed, how different market participants interact, and how regulation affects trading behavior. In terms of my investment experience, I personally pay a lot of attention to US equities, options, AI-related sectors, market events, and macro-driven trading opportunities. I don't think investing is only about picking one stock. It is also about understanding the broader market environment, like interest rate, liquidity, volatility, positioning, and how investors react to new information. This is also why today's topic is very exciting to me. SPX 0DTE options, market events, AI, and the second half 2026 outlook. This topic connects my background in options market structure with today's investment environment.
Great. You must have a lot of experience at SIBO. You were the first economist at SIBO. What did you do for your primary responsibilities and the daily work look like?
Yes, so it was my honor to be the first and only economist back then at SIBO. It was a very unique role, actually, different from a lot of people might thought. Some I talk about interest rate or something. Actually, not. My main responsibility actually focused on research, market analysis, and policy support. Most of you guys, if you trade options, you probably know SIBO is one of the most important options exchange in the world. And it's also the largest option exchange in the United States. So a lot of my work involved study how US equity and options markets function. So we are equity option exchange. There are other exchanges, they have option products, but they might focus on like commodity. But SIBO only involved in equity and equity options. For example, I work on topics such as US option market structure, retail participation in options markets, SP 500, and the index, option trading, market quality, exchange competition, PFOF. PFOF stands for payment for order flow, and a regulation policy analysis. You can find some of my publication on either hotinsights.com or SIBO. I publish some papers on behalf of SIBO. If you are interested, you can just Google and find it. A big part of my role was to translate market data into insights that could be useful for exchange leadership, regulators, institutional clients, and market participants. So there were a lot of conference or common letters needed for SEC conference. And the institutional investors you probably heard about, like Citadel or Jump Trading, all those market makers. Market participants includes retail investors, which Tigers are one of the market participant as well. I was not looking at price charts, actually. I was asking questions about why is trading volume changing, who is trading, how are retail investors participating, how does product design affect trading activity, how do market structure, regulation influence behavior. So this background is very helpful for understanding today's SPX 0DTE market, because 0DTE is not just an option strategy, it is also a market structure story, a production innovation story, and an event trading story.
Yeah, sounds impressive. And would you personally share your research framework for investing in the US stock market besides options before you do options or other trades? Thank you.
Yeah, thank you. So actually I thought about that and I tried to make it more straightforward. My research framework has 3 layers if I would like to make it more intuitive. The first layer is market structure. That means understanding how the market actually works, who the participants are, how orders are routed, how liquidity is provided, how market makers manage risk, and how exchange compete. I think there's so far 16 national exchanges in the option space. And so there are quite a lot of competition. Even we are the one, like SIBO was the one of largest and is still the largest one in the option space. And so that's like actually a lot of retail participants might not familiar about market structure, but actually market structure is very important. The regulator is SEC. So SEC always propose a lot of regulations trying to make the market very fair to retail investors, try to protect retail investor, which Tigers are retail investors, as well as institutional investors. So this is the market structure. It's very important. I have been repeating about market structure. That's also my strength in this space. The second layer is derivatives and volatility. So definitely options is a type of derivatives. There are other like futures also is derivatives. And options markets is, to me, like I really love options markets because it reveals information that is not obvious from stock price alone. If you are good at math or you know how to calculate option price, you probably know there's volume, implied volatility, event risk, positioning, how options active interact with the underlying equity markets. All those matter. That's why I feel like it's very interesting. So we always, when we talk about options, we always talk about volatility. It's not just whether we should buy or sell a single stock, whether you think the stock will go up or go down. So that's very important for option market. The second layer is macro and sector themes. As an economist, definitely I understand interest rates, but I think everyone should understand these macro themes as well, like in today's market. Interest rate, inflation, labor data, AI capital spending, sector rotation, all that matter. Those are very hot topics since 2020, right? The interest rate goes up. The Fed increased interest rate in 2022, and inflation became higher and higher. And people have a lot of concerns about labor markets. And now the AI-related stocks have their price have gone up a lot. So those are the macro and sector themes.
I don't know how to respond to that.
Sorry, sometimes my Siri is talking, so just ignore my Siri. It's interesting. That's also a part of AI. That's the strength of my connecting these three layers. Yeah.
They're very structured and helpful, and I think we are lucky in the continuous section. We will hear more about Selena share about this. And personally, would you like to share some advices to me or some like other secondary market investors? How can we train ourselves to build a structured investment framework? Some tips. Thank you.
Yeah, actually, that's kind of one of my mission to create high insights. Being the economist at SIBO, I realized secondary market investors they're already become more and more sophisticated, but there are things I would like to share, my insights, my philosophy of trading. I think Tiger gave me this opportunity to share my insights. My first advice is do not start by asking which stock should I trade, like which stock should I buy or sell. Actually, like my friends, they're not very sophisticated investors. They always like, should I sell? Should I buy? What's going on with this? My advice will be start by asking what is driving the market right now. So for me, like I care about the fundamentals, the long-term or mid-term structure, what's going on. For this year, everybody knows it's AI-related stuff, or there's conflicts between US and Iran. So all those matters. And also the trade war is also playing a very important role in the economy, geopolitics risk. Those all are very important. So I hope I can always reinforce my advice in my publication or my speech through High Insights or Tiger trading platform. So for example, besides this, sometimes when I'm talking about market environment has a dominant driver, right? The main driver.
Right.
Sometimes it could be earnings, sometimes it could be interest rate, sometimes it could be liquidity, sometimes it could be AI, sometimes it could be inflation, or sometimes about geopolitical risk I just mentioned. For like earnings, we all know like before earnings announcement, stock price tend to go up a lot. Like the recent Microcom MU, the stock price went up a lot before earnings announcement. Actually, their earnings very good, their guidance is very good, but their stock went down a little bit after the peak. So those are very good opportunity for option investors to trade. And when you look at the volume, actually there are a lot of volume before earnings weeks. And another liquidity could be liquidity like a SpaceX launched IPO, right? There's liquidity concern. A lot of cash went to SPX IPO, which drove the liquidity from other similar stocks, even very good stock, very value stock also, like Apple stock went down or Microsoft stock went down, and some other related rocket index stock also went down. So, but that was liquidities. If I am a secondary market investors, I wish you guys can understand what is the reason? What's the cost? What's the driver? It could be liquidity and earnings because the impact is totally different. It could be a very short term and might change the fundamental. Then you can build your strategy through either invest in equities or options. Yeah, I think,
Okay.
yeah.
Thank you. Very systematic structures and details. Yeah, we should be very sensitive to the events every day. And hopefully we can learn more from your Han Insights website, okay?
Yeah.
Thank you. Before I pass the mic to Selena for her main key message, I would like to mention that we have prepared 3 rounds of lucky draws for our audience. Each round with only one winner will be rewarded with our Tiger merch. So regarding how to participate, just need to leave your answers in the comment section, and our team will randomly pick the winner. Here's the picture for the Tiger merge. Now, let's have a first try of our first lucky draw round. Next page. Okay. Have you ever traded SPX 0DTE? Do you know which options below are cash settled? Welcome all audience to put your answer in the comment section, please. Okay, we see a lot of users are typing answers in the comment section. Wow. Good. For those who also answer our satisfaction survey will get 50 Tiger coins. We have a lot of rewards today. Wow. Okay. I think the question and the answer is enough. That's explains.
Should we disclose the answer?
Yeah, you can tell the audience what's the answer. Then move to your part.
I think most of you guys had got the answers, so probably had experience with it. SPX options are cash settled.
Cool. All right, congratulations to the first winner. Let's give the time back to Selena. Remember to stay for 10 minutes accumulatively to receive 25 Tiger coins and get 50 Tiger coins if listening up to 15 minutes. Okay, welcome, Selena.
Thank you. So thank you everyone to be here. Today I already mentioned the main topic here is about 0DTE SPX, and I saw there's already a great question about why it's getting so popular. I'm definitely gonna cover why it's so popular. There's fundamental reason, and there's the demand and supply and all matters here. And here is today's framework. So I will help everyone to understand what is that first, and then why investors use 0DT for event trading. That's kind of answers why it became more and more popular. So then I will relate that to FOMC meetings, CPI, labor data, interest rate expectations. If we have enough time, I can cover AI stocks, volatility in the second half of 2026. And then we will leave some time for Q&A. So that's actually the first question. We asked which one is cash settled. A lot of people, actually I have friends that trade SPX or take cheap SPY, even the symbol are pretty similar, right? They're both the underlying our SP 500 index option. The difference, SPY is an ETF. So it's an ETF, they try to match the SP5 index options. And the other thing is the price level is different. So right now it's trading about SPX 500 is about 7,500 recently. So SPX, the index underlying it's 7,500. For SPY is actually 750. And because it's physical settled. I mean, SPLI is physical settled. So when you get assigned, you will receive the ETF shares. For SPX, it will calculate the price difference either, and then you know what is your realized gain or loss. A lot of people, if they use, then I will talk about the use case about SPX. Cash settled is very useful in the event trading and everything, because you just want to use your information in your trading, not trying to receive or purchase or sell any ETFs. And this is also SPX is European style exercise. Why is that? Because a lot of the options, equity options in the United States are actually American style exercise. It's the rider can exercise it before expiration, and if you depends on you put a call and you are on the other side, you could be exercised before expiration. Don't expect nothing will happen before expiration. Actually, it could happen before expiration. But SPX, you won't. So you will not have early exercise risk for SPX. It's quite important, because you don't want to anything affect your strategy, your planning, right? So no delivery of underlying stocks. And normally, for most of the options, multiply as 100. 100 means if you are trading one option contract, the notional value is 100 multiplied the underlying stock. For if you are trading Apple recently is about almost 400. It's about around 400, I think, or 300. So assume it's 400. I think it's 300. Sorry, it's 319. So assume it's 300 for Apple, and then if you want to buy a call option of Apple expires sometime at strike price, actually it means the notional value is 300 multiplied by 100. Yes, so think about for SPX, it's already pretty large the number, right? 7,500 multiply 100. So it's quite expensive. But usually people use spreads instead of just buy a call of SPX. But also I will talk about why 0 DTE for SPX. So first, what is 0 DTE? Actually just abbreviation for 0 days to expiration. DTE means days to expiration. So it's the option expire on the same day it is traded. And so there's a lot of benefit of 0 DTE. If you want to trade event for certain event, the event happened today. You don't want to worry about what's gonna happen after today, because you only want to trade information you have or your expectation of the event today. So that's why you pick the option expire today rather than later. If it's later, there's other risk involved. There's something might happen in the future, right? So that's why it's very popular for event trading. The event happened today. So the key question, does the investor need the exposure of today? So I kind of already answered that. The next one. So actually, if you are interested, you can find my paper published on SIBO's website. It's SPX 0 DT, it's just a small part of the paper. I covered that because it's getting popular, as someone asked the question, right? And it's very popular among retail investors as well. So here I show some data about the growth. Look at that. It was 2016, the percentage of SPX volume, 0 DTE. So think about that. What's 0 DTE? It's the expires on that day, right? And there are other options, contracts of 0 DTE. They expire a week later, a month later, or even a year later, right? So 0 DTE before was only less than 10%. But there are other reasons. I will say there's production innovation. In the later, I will actually here I mentioned in 2022, the growth is rapid, super rapid. It became 40%, and even now it's almost 60%. And actually in August 2025, it's above 20%. Just so means most of the SPX options traded expires today. Or then there's other like expire next day or something. Why is that? First, there's as I mentioned, for secondary market investors, I care about what's going on in the market, what's the main drive. Here, I did some study. I think the main drive is Fed increased interest rate from 2022. If you remember, because the inflation was very high, so they started have FOMC meeting and discuss and try to raise the interest rate. Every FOMC, before even FOMC, investors try to think how much they're gonna raise, right? They always talk about 25 basis point or 50 basis point. The investor try to guess that before they announce that, and after they announce that, then still you can still trade zero DTE options based on what your expectation is in for the future. The other innovation happened was Cboe launched the Tuesday expiring SPX weekly launch. I saw there in the chat somebody even typed the symbol SPWX. SPWX actually is the weekly SPX. For before that, like a long time ago, there were only monthly expired, which the symbol is SPX. So usually when we talk about SPX, we actually include both monthly expired or weekly contracts. And so, okay, the first day launched this one, Tuesday expired. And the other question is the standard expiration day is Friday. So there's always Friday expiring options for any options, not just SPX. And later they launched Thursday expiring SPX weekly. So after that, what means like every day there's SPX option expiring. That's why investors can apply this zero DT strategy, because every day there could be events like US and Iran had a disagreement. On Monday, you can trade something, or there's something FOMC. Usually it's a 2-day meeting, so there's a lot of volume on Tuesday or Wednesday. Okay, now you can trade it. On Thursday, there might be something else happen, like other reports happen, so you can trade on Thursday. Friday, I just mentioned the standard expiration day. There's always Friday SPX. Yeah. So that's why it's getting popular. Retail investors are very smart, including retail investor. They find out this is a great tool. There's less uncertainty. It's mostly the exposure is coming from the event, one single event. So they utilize SPX 0 DTE for their strategy. Here, who trades SPX 0 DTE? As you see, long time ago, there was not everyday expiration. So 0 DTE was a very small portion of that in SPX options. And the majority of the participants were market makers. Market makers are always there because they need to provide liquidity. They're on both sides, right? It's when you're trading, the other counterparty is always market maker. No matter you're selling or buying, they're on the other side. For institution, they trade for hedging purpose. They usually have a lot of position on something. They could trade SPX in case of they will worry about recession. Recession might come or might not come, but you still hedge. Everyone should hedge. So they hedge because they have a lot of position exposure. It's a great tool for macro exposure because SPX, SP 500 is a very popular index, right? So that's why even SPY, the ETF, is very popular, or VOO, right? VOO, SPX, they're the same. The underlying is all SP 500, just the price level is different. They're very popular because they reflect the entire market. And it's the return annual growth is very well. So even active portfolio manager cannot beat SPX, SP 500. And the retail, I just mentioned, since then, 2022, retail investors are very smart. they found that's a great opportunity for them to trade, make extra money. And I saw like Discord or other platforms. There's a lot of group people talking about that every day. Here, so in that paper, you can go to SIBO's website and find my paper. I showed how it looked like up to 2024 because I published in April 2024. Here, I add additional information and trying to see how's going on. The retail participation actually, see, it's a majority. Retail is actually the major player in 0DTE SPX option market. The volume goes up and go down. When there's uncertainty, retail investors are really smart. They kind of take a pause. They think it's not clear what will happen. What happened in April 2020? Before 2025, it's not clear. What happened in April 2025? So you guys can comment in the chat. Actually, if you remember, it's President Trump announced the tariff, right? So in April 2025, that's a great event for people to trade SPX or DTE. The volume went up. Like every month was creating. When I was working at SIBO, they're telling me like, oh, we made a record high volume. It's like doubled, and another time doubled again. So May keep going on. August below is because tariff. There kind of relief from tariff. U.S. China had some conversation, and President Trump kind of lowered some tariff, had some progress with other European countries, if you recall that. That's how, like, when I try to analyze it as an economist, or I try to trade as a retail investors, I try to understand what's going on or what will happen and for 0DTE or other equity options. Yeah, here it is. Now, Esther.
Yeah, thank you. Sounds very active market. And here we comes another lucky draw. So every audience, please answer the question shown on your screen about what percentage of total retailer SPX options volume do 0DTE options account for. There are 4 options. Please type your answer in the comment section. We'll see different answers now.
There's a lot of good questions.
We see A, B, C, D, or numbers. Okay. If anyone traded SPX 0DTE options, you can tap yes in the comment section. Let's see.
Yeah, have you tried trade it?
Yes or no? I didn't. See.
Oh, we have someone trade it. Must be very sophisticated, you know, because usually they use a complex strategy, spreads, not just
Yes.
buy, call, sell, call, buy, put.
Oh, so strategies.
There's a learning curve.
Learning curve. Cool.
Yes, I trade SPXW every week. Yeah.
Wow.
You
Yeah,
must be
please
super sophisticated.
send questions regarding recent events you want to ask. Maybe Selena will answer later. Okay,
You know
time
the
is
answer
enough.
by the day.
Yeah,
Okay,
yeah.
let's reveal the
Selena.
answer.
What's the answer?
D. Most people answer D actually.
Cool. Congratulations. Okay. Our
Congratulations,
team member will select the winners very soon. Back to Selena to the second part. Thank you.
Okay, I will continue my slides and then get back to the question. They're great questions, and some of the question might be answered, later in my slides. So here I kind of already mentioned about the timing, what happened. One thing was the macro environment, interest rate, inflation, right? After COVID, everything became very expensive. And before that, actually, the U.S., if you're very familiar, most of us are very familiar with U.S. economy, if you trade U.S. stocks, the interest rate was almost zero, nothing. For a very, very long time. That's also why the U.S. economy was so well and the stock market is so good, housing market is so good, right? Interest rate is everywhere because, for example, mortgage, right? Mortgage is also based on interest rate. Since the interest rate was so low, most people can afford mortgage and buy a house. And so that's why it's so important. Besides that, also the SIBO launched the Tuesday and Thursday and then make the weekly everyday expiration. Now you don't need to even risk for one more day. The other people also use it. If before there's no Tuesday SPX and the event happened on Monday, they still trade on Monday, but it's not 0 DT. It's like 1 DT. There's 1 day risk. It might something happen. Now they don't need to sacrifice compromise for that, right? They don't need to compromise for that. Every day there is expiration, and I saw people they trade their weekly SPX as well. Now it's still popular. Why? After that, we are talking about when Fed is going to lower interest rate, right? Every day is talking about that. It's very popular, and I really like this phenomenon because investors realize this can help them to make some extra income if they're really good at that. Then they pay a lot of attention to the Fed conference, Fed press. I saw on social media and people talk about the chair was talking about that and the new chairs. They try to understand the narrative of new chair, whether they are going to be hawkish or dovish, and then you trade SPX or other products, right? So I really like this phenomenon with the retail investors nowadays. So I kept saying it works for event trading. And I also already mentioned about those other days. For interest rate, we already know that Fed announced the interest rate, the target rate on FOMC meeting. And you can on their website, you can see schedule the meeting. And people trying to use all kinds of tools like treasury yield or anything to see they're going to increase or lower and how much. It's not just a lower or increase, right? It's by how much. Because why? Interest rate is a very important factor, like a math in the stock price, right? It's the denominator of stock price. If interest go up, then stock price will go down, so vice versa. And that's why interest rate is so important. Back then, why nobody talk about interest rate? Because it's always low, like almost nothing. So nobody talk about. When now it's so high, everybody's talking about. From 0 to, the short-term yield now is like 4%. Before was almost nothing. That's a big difference. And as we know, Fed make decisions based on the labor market and inflation. So I found before that usually trade around FOMC meeting. Later, they're more even like CPI announcement day, non-farm payroll, and job market, right? The unemployment rate. A lot of people are trading SPX 0 DTE on that day as well. And usually they announce in the morning. And you can see either Thursday or Friday, a lot of trading volume going on. You can even trade like in the middle, or you can trade in the morning, early morning, and close in the middle. There's so many strategies. If you're interested, you can spend your time and study that. And the other things, yeah, I already mentioned Y0 TTE, they're less premium. So for options, there's always like time value in the component. If the days to expiration is long, the time value component is very big. For 0 DT, their time value is almost 0. The only thing is affecting the price is what is anything going to change the market widely. So that's a great tool. You don't need to pay for the premium time value. We call it time decay. If you are holding call option and it's gonna expire in a month, even the underlying didn't change, the option price will keep going down. So I try to educate when I was back at SIBO, a lot of people don't understand. They think retail investor not smart enough because they're buying call option, and the call option price always go down if the underlying is flat. So I think most of the investors already understand that. If you don't, you need to keep in mind. And there's another thing, not about 0DT, but if you trade any leveraged, like 3 times bear QQQ or bull QQQ or something, actually they use either futures and options, depends on the product. There is time decay. So don't hold it for a very, very long time. Even the underlying is doing well, you're gonna lose money. That's the same thing, the time value as a big component in derivatives. Yeah, the next one. So I kind of already covered that. Also, I also kind of covered that as well. This is kind of logic here, but I would like to reinforce that when you're trading, think about this chart, CPI, labor market, everything, anything, and people even listen to chairs any presentation. The presentation could be at a university or something. They try to interpret whether it's hawkish or dovish, and that means like whether they're gonna go increase or lower. Or recently, there even are a lot of controversial debates, like Bank of America think and the Fed is going to increase interest rate because inflation is high. But a lot of economists, they disagree. They think, no, we can't because it's going to suffer the economy. We should increase interest rate. And so there's a lot of difference, debates in that. A lot of people trying to follow that, have their own opinion. So that's why SPX still have a lot of volume, even we are away from the next FOMC meeting. They try to hear from the chair, dovish or hawkish. Another thing is you might expecting they're going to lower the interest rate. We definitely think they're gonna lower the interest rate because the interest rate is really high. Not good for investment, not good for the labor market. But when also matters if they're gonna cut the interest rate this year or next year. So investors also want to make this guess or estimate also matters. Trying to listen to the press, the Fed press or anything to make a guess. Also the treasury yields, there's tools, you can look at that and trying to utilize and trade SPX. That's why like even sounds like there's no market event happened, but there are still a lot of people trading SPX and yeah, use different strategies. As we all know, like options, you trade volatility. It's not, you can make it directional, you can make it not directional. If you think the volatility is go up, then you long volatility. If you think the volatility is going down, then you short volatility. There's lots of strategy and very interesting. That's the charm of options. I cannot mention the FOMC became very important. I already mentioned so a lot of people pay attention to this, like the dot plot. But dot plot is not always accurate. They are just projecting based on our Fed always say we have a lot of economists trying to estimate what's going on. Here is our trajectory. How are we going to change our target interest rate? So that's the dot plot. Another thing, I talk a lot about SPX 0DTE. I also want to cover about the second half of 2026 or just recent situation. If you trade, you probably know the inflation is high, CPI is high, but inflation, there's many things you want to look at, right? It's the core CPI very high or something is very high. So the core is very high recently. The other, like the housing price is very high. It's also a part of in the index. And the other thing is affecting all products, which is the oil price. That's when US and Iran had a conflicts earlier this year, late February, oil price skyrocket. Like if you drive cars, you know your gas price is super expensive now. And the gas is the input of transportation, and transportation logistic is involving everything, grocery shopping, everything, right? So it stay high. But now it sounds like the conversation between Iran is getting better. So we expect the CPI will go slowly going down. And the other thing was last year, the trade war thing. US still imposed a lot of tariff on China imports, right? And that's why even Apple kind of relocate their manufacturers to India, trying to avoid those tariffs. And other Asia area or Mexico, we already know that, trying to lower the cost. But still, the tariff and the crude oil price are main drivers of the CPI inflation. I was keep emphasizing we need to think about what is the main driver, and I always talk about long term. And then when you trade, you always think about is this gonna change? Crude oil, maybe gonna change. How about tariff situation? Uncertain. We don't know how President Trump will make the decision later. Another thing I just mentioned about labor market, right? Well, if the labor market is good, we can kind of increase interest rate. If the labor market is bad, we cannot increase interest rate because it will make the market even more struggle. Why? Because like payroll, non-farm payroll is very important. That's the operating cost for the public company or any companies. But since we are trading stocks, they are the public listed companies. So if the payroll is high, that means their operating cost is high. The payroll is low, the operating cost is low. And the other fact is interest rate. Interest rate is the cost of how they raise capitals. And the interest rate is high, it's very hard for the company to borrow money from bank, so they don't have enough. They will cut their budget on R&D and everything. So far, I am not very optimistic actually at the labor market. So why is that? The other fact is AI related restructuring. If you follow up newsletters or you know anyone, last year, starting from the big techs, they lay off people because they think AI can replace most of their junior work, like repetitive work. And now it's going to finance. Finance is also a lot of big finance companies like Discover or Bank of America or Morningstar. They restructured as well because they try to adopt AI in their operating. So it's either they proactively try to lower their operating costs, or they might have some pressure from investors. The investor will ask them to lower their operating costs because you have AI. You don't need people to type everything now. You can use AI, just dictate, and AI can create the slides. Like today, maybe you can create my slides for me as well. Use AI. So this is really affecting the job market for educated people, actually, who are making a lot of money, contributed to GDP. So there's a lot of I would like snowball effect, I think, which has not been announced or revealed in the unemployment rate. I know a lot of people, they didn't disclose their unemployment situation, so it's not included in May or June reports. So that's my insights. I think the job market is not as optimistic as the data showed, which means what? Which means the interest rate should not be increased because the job market is not that good. Then you can think about how are you going to implement in your trading strategy. That's why it matters. I think I covered everything so far I want to cover for SPX. And here, Esther, your turn.
Great. Thank you, Selena. Give us the logic behind understanding the market and trading. I believe we will continue to learn and practice well. Here we comes the third round, lucky draw. Which of the following situation is the most popular for using 0DTE? Welcome our audience to type your answer in the comment section. First, A is about Fed's interest rate decision. B is about a company's earnings release. C is the last trading day before a long weekend. D is a quiet trading day with no major events, which is most suitable for use. Great. We see many smart,
Most popular.
experienced maybe traders. Thank you for participation. And our team member will select one winner to award our Tiger merch.
So I'm gonna review the answer. Should I?
Yeah. Mm-hmm.
They're still typing. Yeah, actually, I kept talking about that. Yeah. So the answer is pretty obvious. Congratulations.
Okay, so Selena, please take your time to the other part of your key message. Thank you so much.
And I see there's a question, maybe I already answered, but I can repeat the question like how CPI and the labor affect rate decision. So I can kind of reinforce that my explanation again. So for CPI, it means CPI is index like indicator for inflation. If CPI is higher, then inflation is high, right? So inflation is high, then so Fed try to increase interest rate if the inflation is high. Yeah. So because they don't want to make the inflation too high, so they kind of like we call it trying to restrain everything by increase interest rate if the inflation is high. So that's the relationship. For the labor market, it's like if the labor market is bad, more people get laid off because AI restructuring or other issue. So then they will not increase interest rate because they will make the companies more struggle, right? So this is like a trade-off. One increase, one CPI could go this way, make it higher, but the labor market make it lower, or they can go the both way. So you need this to trade off how the Fed use these two indicators to help them to make decisions, rather one indicator. Okay, so that since we have time, I can cover this part. I'm not an expert in AI development, but I'm a kind of daily user of AI, and also I'm interested in anything related to stock market and option market. And AI is so hot this year, right? And you see a lot of the hardware storage company stock price 10 times. Like they went up 10 times. However, like Apple or Microsoft, Meta, their stock price didn't change, even became lower. I'm going to write about an article and publish later on Hunt Insights. If you are interested, you can subscribe and follow and find the answer later. Here, you may not understand what's going on. Why? It sounds like, oh, Apple is doing AI, Meta is doing AI, Microsoft is doing AI. Microsoft have some collaboration with OpenAI, which is ChatGPT, and Cloud is going to do IPO or something. Like why some stocks going up, why some stocks going down, and why some stocks going up so much. Even you might notice it's very has been discussed widely, which is the Korean stock. Like if you actually I traded Korean market index as well, ETF. So then I actually followed them. I witnessed they went up a lot and they became very volatile recently. Why is that? Because the main driver in the Korean market index was the hardware, right? The memory hardware manufacturers and make entire Korean stock price very, very high. Same here. Anything related to that this year, the stock price increased by 10 times. So actually, this starts from NVIDIA. NVIDIA starts the AI investment cycle. And then people find there's a bottleneck. We need to NVIDIA and create the GPU, right? And we need more GPU from NVIDIA. And later we found out we need more semiconductors. We need more data centers. We need more cloud capacity, power demand. So it's like affecting this and this and that one. So all this stock price go up. Some go up more because they are more directly affected or they are affected now. Some increase little because they are indirectly affected or they will benefit from this cycle in 5 years rather than now. And however, there's a paradox. People are like, why SaaS company are suffering recently? Like Meta stock went down. Their record high was like 700. Now it's trading either below 600 or a little bit above. Why? And they're considered as SaaS company. There's a lot. There's different perspectives. One thing is they spend a lot of money. Even Oracle, right? You probably trade Oracle. Oracle stock price went up a lot, and their earnings. And a lot, if you trade options, you will see a lot of options trading before earnings, before announcement of Oracle, and then the stock price went down significantly. Even their earnings is great. Why? Because Oracle mentioned that they spend a lot of capital, cash actually, on the AI development. It happened with many other SaaS companies. They need to spend a lot of money in developing AI-related tools. So far, investors think this is bad. This makes their cash flow very concerned. So their stock went down. However, hardware stocks keep going up or being volatile. That's the AI investment cycle. Yeah, so those are very famous names. Their stock price went up a lot recently. So I quickly covered what's going on in the AI related sectors, but since I focus on equity and options. I know I love options so much. This is great opportunities for option investor to trade for those AI stocks. Why? Volatility. Option traders always love volatility. When there is a volatility and the fundamental didn't change, it's a great opportunity. But this is not, I'm not making any recommendation for you to trade options, but you can, if you don't understand that well, you should you should take some courses, take some learning curves to understand how to trade options. It's not so straightforward. You need to make sure you know what you're trading, and then come up with your strategy to trade the very volatile stocks and make sure the fundamental is good. Don't risk yourself if that company is not doing well. Yeah, so that's why as the option investor, we can benefit even they're very volatile. They already hit the record high this year. We can still benefit from that. So here's the final takeaways from my discussion today. I want to summarize it. First, I spent quite a lot of time on SPX 0DTE, which is great in event trading instrument. and it matches option maturity with event horizons. And it's lower costs in terms of time value, almost no time value because expire on the same day. The second takeaway is market events matter because they change expectations. I kept saying interest rate, FOMC, CPI, labor data, yields, equity options, all those those are very important factors at any time. So everything you learn today is not going to expire. Always are very important when you trade. You always need to think about that. That's the second takeaway. And the other, no matter you're trading SPX or a single stock like Apple or Tesla, or whatever, because interest rates is always a very important fact in that in the equation. The third takeaway is the second half of 2026. Still, I think it still remain event driven, AI repricing, inflation, labor data, rate expectation. A lot of people are discussing, economists are debating whether Fed is going to increase, going to cut, or they're gonna extend their decision, just stay at current interest rate for next year. Those are very important because remember the interest rate now is very high in the history, pretty high. So that's very important. Every time you're trading, make sure you understand the macro environment. Interest rate is high. Definitely they will be lower when it matters. And the other thing is AI repricing. When the AI stocks already come up a lot, like Nvidia. So it didn't go up furthermore, and sometimes it will even go down. The fundamental didn't change. What happened is the repricing. It's reflecting the market expectation. That's why I love trading or investing, studying equity option market. It's the charm. Every day you have a lot to study. Yeah. That's all for today. And the Q&A
Thank
session.
you.
Mhm.
Yeah. Thank you for Selena sharing again. We are now open the floor to audience questions. I see a lot of questions. Miss Selena, browse the comments section and find some question that you would like to reply. Thank you.
There's so many. What are the analysis tools such as indicators to determine my strategy for SPX? That's a great question. So most of the retail brokers, they already have some tools for trading options. Even provide education courses like today. This is for education, right? If you never heard about zero DTE or you heard but you never had the real experience, today you had a great experience, have better understanding about what zero DTE. The great use case is trade events. So most of the brokers, they provide the education opportunities for retail investors. And even on their website, usually they have the analytical tools. If you don't know, you can just ask Tiger, ask them do you have analytical tools? How can I make sure this strategy will work towards my expectation? That's very important. Before you trade, you already need to have expectation. The expectation for trading option is not necessary to be the price go up or go down. Could be volatility is going up or going down or not change. Either way, you can make money. And there's many textbook or classes you can take to figure out how to trade for one type of expectation. And there's tools. I even built, actually, when I was working at a SIBO, I built the probability of profitability, which means what is the probability for you to make money and how much? Because our option is basically math, and it's a probability function based on the probability. And then you put everything and you have your own expectation and see what is the probability for your strategy to make money. That's the broker usually provide these tools. If you don't, you can also purchase any analytical tools for that. The other question is, tonight we can, if believe that market will move big, would I consider 0 to play the event. You can always trade the 0DT SPX options any day. You know, just because that's the nature of options. If it's flat, you can not the volatility didn't change or the stock price not gonna move, you can still trade. If as long as you have an expectation and you try to gather enough information and help you to have an expectation, right? That's why the FOMC meeting it help you. You know, it's pretty sure the FOMC sounds like they're gonna increase the interest rate. Then that means the stock price will go down. You gather that information. You have like 99% or 100% sure about the stock price will go down. Then you trade 0DTE option. So you can always trade. The other thing on the data giants like NVIDIA and AMD release their earnings reports, would you use individual stock options? Oh, so for this, definitely you should use individual stocks rather than SPX 0DTE, right? Because SPX 0DTE is for the market. But if you think there are other things like spillover effect, I mean, one stock might affect the same sector. For example, I think there's cases Oracle made something and their stock went down a lot. And the investor had the similar concern to Microsoft. I'm just making up. I don't really remember what happened, but that happened a lot because they're in the same sector. They either will have the same issue or challenge for other competitors in the same sector, and the other stock will go down. Or the story will be actually they gain more market share because they launched some program, and so their competitors' stock price will go down. And you can utilize all this to trade single equity stock, or you can trade like Nasdaq because you think this is gonna boost entire tech stocks. Okay, then definitely you can trade the Nasdaq rather than SPX because it's more relevant to that sector. If you trade SPX, it might not go up a lot. You see when you trade, you see sometimes Nasdaq go up a lot or go down a lot, but SPX didn't change that much. So you need to make sure which one is a better tool for your event, for that event. May continue to stay high in second half. Yeah, I think AI stock may continue to experience high volatility. Yeah, in the second half, yes, definitely. But as I mentioned in the chart, there is a cycle, AI cycle, right? Depends on what sector they are in. Are they the SaaS? Are they the semiconductor? Are they the GPU provider or anything? The impact is very different. I will try to make it more detailed in my paper. It's gonna take me a long time to finish my paper because each sector has different correlation in these situations. It's gonna be volatile. Another thing mentioned that all those are tech stocks, right? Tech stocks has high beta, so they are already more volatile than other stock. Other stock could be Costco, Walmart, Coca-Cola. We're talking about the beta is very small, right? So which means when the interest rate change a lot, it will affect those high beta stock. Because why? Because high beta stock, they are growing stock. They need to borrow money from the bank and they keep expanding their business. So interest rate matter. And the other thing is it's interest rate. If you took a CFA exam or whatever, it's a discounted rate of the stock price. So there's a lot of potential for growth company to keep growing. If the interest go up, it kind of discounted their growth. So AI stock tend to be tech stock. They're high beta stock. Interest rate change will affect the AI stock dramatically. Another reason why they are very volatile. Any other questions? Hope tech can provide 24-hour. Oh, I've heard actually SIBO launched some after hour options. It's not just Tiger's limitation, actually, it's just the exchanges actually do not provide. Exchange make it happen. And Tiger helps the retail investors or other investors to trade, right? So you can understand they're market participant. Brokers help you to trade and execute your order, and the order will be executed on exchange. If the exchange there's no exchange, let it happen. Let option trading overnight. Then Tiger cannot do anything with that. But actually, Cboe just announced they're already doing or they're going to do overnight trading. So yeah, so good news, you can trade this because they realize there are a lot of investors overseas in different time zone. Europe, Asia, they want to trade, especially tigers, right? In Asia, they're let's trade, and they are actually making it more not just SPX option, even single equity like Apple or whatever options trading overnight. Good news to you guys. Mm. Oh, let me know when I should pause. I'm just keep reading the questions. Is there any questions
Okay.
before? Yeah, so I explained why AI stocks are very volatile, right? Their fundamentals, their interest rate or anything like those are also their trading positioning. A lot of people already gained, like institutions or whatever, they already gained a lot from the AI. Or any this what I'm talking about is not just only applying to AI, but applying to all stocks. When they gain a lot, they try to realize their gain, either rebalance it because, for example, if you had one of those AI stock, it is 10 times than 2 years ago. Now it could be you have a lot of exposure in that stock, right? And you don't want to have a lot of exposure in a single stock because it will make your portfolio very volatile. You don't want this. What if their CEO made a bad decision? Then the stock price will decline, drop dramatically the next day, and your portfolio will all of a sudden like decline dramatically. So you usually people very sophisticated investors or portfolio manager, they will rebalance. That's why one reason they either repricing it, rebalance it, their sell of AI stock. But the fundamental is still very strong. When they see, oh, there's oversold in certain stocks, and then they will buy again. They go up and down. It's just very volatile. A lot of liquidity in those stocks. Why Trump bomb era, but the price of stock went down? It tumbled because stock market is about future. It's not what happening in the past. So if you think future is benefiting the stock market, the stock price will go up. Stock price is always the future cash flow of the company.
How about the last two questions?
Zero cheaper or deeper event trading. Also, I kind of explained it's cheaper in terms of time value, right? So it's way cheaper actually. A lot of it way cheaper for SPX, zero DTE. And also it's simply cheaper and also there's no risk exposure for next day after today. You don't want to have this worry about those risks. Do you see zero disagree for hedging, speculation, or market gambling? So if your exchange, you don't want to say SPX is a gambling tool. You can see speculation. There's nothing wrong with speculation. And hedging zero SPX is always a great hedging tool, no matter what, right? Because it covers the market exposure, and also give you the leverage for options. If you buy put, and as I mentioned, the multiply is 100. One contract means 100 shares of underlying shares. So you just a little bit premium, you can cover the downward exposure, which is very good, just like buying insurance. Speculation, there's nothing wrong with speculation. We always want all kinds of market participants in the market. So that's why there's a lot of volume in the US market. They keep growing, not just SPX option, but as well as other single stock options as well for speculation. And for market gambling, you mean probably speculating. A lot of people, they don't have the expectation. I know, like they just think today, the stock price SPX might end up high or low since it's cheap. There are people doing that, but I think tigers are very smart. And today I shared a lot of thoughts. You can do your own analysis and think about that. It's better to have some expectation, strategy. That means you will have a higher likelihood to make money. Yeah, I think that's all.
Okay, how about the last question? What's your take on checking gamma options steps?
I don't for SPX options or any options.
Maybe it's SPX.
What's your take on racking gamma option depths? I don't understand that question well.
Okay. I think that's enough. Today we have improvement.
If he can elaborate, I can answer that question.
Okay. For our audience, if still have questions, you can find Selena Han insights at our Tiger community to comment at her sharing about this live. And then I think it's time for us to do some summarize and go for the ending part. Okay. Thank you again for Selena's contribution. She has such a busy schedule. And for everyone, yeah, we can go to Selena High Insights and also her website, highinsights.com.
Yeah, here's my information, the websites, and this is my ID here. Yeah, I will keep publish as many paper as I can for my rest of my life, actually.
Yes, okay. And here we have another bonus assignments for our audience in the following week. If you are interested in this topic, and you can share your demo trading plan or your understanding on this point, just tag a TB Live. We will find the audience and give some post rewards, okay? And at last, let me comment that we will edit a report for today's key message and share in the community. You can always watch the replay in our Tiger Trader app, and we look forward to seeing you all in next one, especially for Selena. Thank you for all of your great sharing, and we will see you next time.
How
about
Thank you very much.